So by the end of this chapter, you should be able to define and explain the terms used in cost and management accounting, appreciate the role played by cost accounting in business management, distinguish cost accounting from other related disciplines of accounting, understand the various cost accounting. So a brief content of what we are going to discuss in this chapter. We shall look at the meaning of cost accounting, that is the definition of cost accounting, the difference between cost accounting and other disciplines, the purpose of cost accounting, cost accounting terms, cost classifications, and then at the end of this chapter, we shall have an activity that is related to what we have discussed. So the learning resources that can help you in this chapter, you can read these, you can look through these books, which is Susan and Beveled. Then you can look at Malcolm Smith. So they will help you to understand this course very well. So our general introduction, when we look at financial accounting, or if you look at the whole accounting, is mainly we can classify it into three branches. We have the financial accounting, which you have already covered from in your year one, the introduction to financial accounting, the intermediate accounting. They all fall under this financial accounting. The issue in financial accounting is about measuring performance through preparing various reports. So you look at the whole process of financial accounting, which is recording, classification, summarizing, communication of information. That is financial accounting. Then we also have another branch of accounting, which is cost accounting. The cost accounting, mainly, I can say, it's about how to determine a cost of producing a product or a cost of producing a service. Another branch of accounting is management accounting. The management accounting is about decision making. So we are using the whole of these accounting informations or the accounting branches that is going to feed information in this in order to be able to make decisions. So the management accounting, it's all about making decisions using relevant information. Some of the definition, if you look at what we call a cost, those are resources that you are going to use in order to accomplish a specified objective. For example, if you need 10 kilogram of material to produce, so the value of those resources that you are going to use in producing, or the value of the material that you are going to use to produce a given product, is what we call a cost. So another one is cost accounting. So we have looked at what we mean by cost. So cost accounting is just a system that used to summarize and report cost information. So when it comes to costing, that is allocating a given cost or allocating a given expenditure on a product or on a service that you are producing. So where are you going to apply the cost accounting information? The cost accounting information can be used in financial accounting, most especially when you are preparing your financial report. For example, when you are preparing the statement of profit and loss, you need the cost of goods manufactured, if it is a manufacturing company. If it is not, you need also the cost of sales. So the information regarding the cost that you are going to use in your financial reports, you need to get it from the cost accounting. In management accounting, we use cost accounting information in various decisions that we make. So the management accounting, mainly the information from the management accounting, it is used by internal users, whereas the information from the financial accounting is used by both internal and external users. So what is the difference? If you look at the difference between cost accounting and management accounting, if you look at financial accounting, the objective of financial accounting is to determine performance and financial position. That's why you prepare a statement of profit and loss, you prepare a statement of financial position. You want to know the performance. So when it comes to management accounting, the objective is mainly to help management to formulate policies and plan. So the information that you are going to get from different accounting disciplines, as you have looked before, will help you to formulate policies and plan for the future actions. Another, if you look at the nature of the information, the financial accounting, it mainly deals with historical data. You prepare, for example, your financial reports at the end of the period, meaning the information recorded in these reports is mainly historical. When it comes to management accounting, mainly it deals with future projection, that is future information. You look at maybe standard cost, budget, those are future information that you're going to use. So if you look at the subject matter, the financial accounting information, it covers the results of the whole business. Whereas when it comes to management, you are mainly at different units. You are interested in the different units of a business. You don't cover the whole information as it is in a financial accounting. So if you look at the comparison, the preparation of financial statement is compulsory under the law. In the law, it is a must. You have to prepare a financial statement. All companies must prepare a financial statement, whereas preparation of management report is not under the law. So if you look at the precision, it records the exact figure of transaction. But in management accounting, we mainly use approximate. That's why you have standard costs. If you look at the difference between cost accounting and management accounting, cost accounting, it records quantitative aspects of transaction. Mainly you are looking at the quantitative, because in cost accounting, our main interest is how to determine a cost. So most of the information that we use in cost accounting is quantitative. When you go to management accounting, it records both qualitative and quantitative aspects of information. So number two, it records the cost of producing a product and providing a service. As I said before, the main emphasis in cost accounting is the cost to produce a product or the cost to produce a service. Whereas management accounting is about providing information to management for planning and coordination. Another difference between management accounting and cost accounting is that cost accounting, it only deals with cost ascertainment. As I said, in cost accounting, our main concern is how to determine a cost. Whereas management accounting, it deals in a wider scope. It includes financial accounting and other aspects of cost accounting. So another one is it uses both past and present figures. In cost accounting, you can use both the past information and the present information. But management accounting, mainly we use future information, because what we do is a projection of what is going to happen in the future. So let's look at the purpose of cost accounting. One of the purpose of cost accounting is a analysis and ascertainment of cost. As I said, the main issue here is to determine a cost. So one of the main purpose of cost accounting is to determine the cost. And when we are determining the cost, mainly we look at material cost, labor cost, and overhead cost. Another difference, or another purpose of cost accounting is the cost control. Cost accounting can be used as a tool for controlling cost. So we can use cost accounting to control material cost, control labor cost, and overhead cost. Another function is planning and decision making. As we said that the information that you get from the cost accounting is going to be incorporated into your management accounting to be able to do a planning, or for example prepare a budget. You are going to use your standard cost and then use the standard cost to be able to plan and then forecast or make decisions. Another importance is setting prices. We use the cost accounting information to be able to set a price of a good or a price of a product. So in our normal cost accounting, or what we call the traditional accounting, cost accounting, the first step is to determine a cost, and then after you determine a cost, then you can be able to set a price. So you just look at what is going to be my profit margin, then you add the profit margin to your cost and then determine a selling price. So measurement of efficiency, because we said the cost accounting can be used as a control tool, meaning then it can be used to measure efficiency. So the cost information, you just look at you can look at the different departments and then be able to compare performance of different departments and how each department consumes a cost. Another one is ascertaining or determining the profit of activities. So as we said, or if you look at if you want to determine the profit from the economic point of view, profit is equal to total cost minus total revenues minus total cost. So you need the cost accounting information to be able to determine a profit. So let's look at the classification of cost. A cost can be what we call a cost classification is about grouping the costs according to their common characteristic. So you look at the characteristic of a cost, and then from that characteristic you can be able to group that particular cost. So a cost can be classified in different ways. You can classify a cost according to the nature or element. So under that, you can classify a cost as material, labor, or overhead. So you can say material, then you can look at the material cost. If it is labor, then you're going to look at the labor cost. If it is overhead, then you can look at the overhead cost. Another way to classify a cost is that you can classify a cost according to the function of that cost. So under this, a cost can be classified as a production, administration, selling, or distribution cost. Another way to classify is a traceability, where you can classify a cost as a direct cost, or you can classify cost as indirect cost. So when we say direct cost are those costs that you can be able to trace in full on a product you have produced or in a service you have produced. For example, if you are producing a table, so the material for a table or those timbers that you see on the table are classified as a direct cost. When it comes to indirect cost, are those costs, they are incurred within production, but you cannot trace them in full on a product you are producing or in a service you are producing. For example, the salary of a supervisor. You cannot trace the salary of the supervisor on a product you are producing, but it is important for the supervisor to be there during production. So another example is, say, you can have the depreciation. Those are indirect costs. So another one is you can classify a cost according to the behavior or variability. Under here, you can have a cost can be classified as a fixed cost, And when we say a fixed cost, it means that the cost remains constant at all levels of activities. When it is a variable cost, it means that the cost varies according to the level of activities. If it is a semi-variable, it means that the cost contains two characteristics. It has one part that is fixed and another part which is variable. A good example I can give here is that if you have a salesman may be given a fixed salary, but it can also be given a commission depending on the items sold. So the fixed salary will be fixed, but the commission is going to depend on the number of items that are sold. So meaning that commission will be a variable, but the fixed salary will be fixed. Another way to classify a cost is according to the controllability. There are some costs that you can control, and most of the direct costs we say they are under control because you can know, because they are variable. But there are some costs that you cannot control. Whatever way decision you take, you are going to incur that cost. Then we say that cost is uncontrollable. Then we can have normality, and you can classify a cost according to the normality. Normality, it can be a normal cost or it can be an abnormal cost. When it comes to this, the normality, a normal cost, we shall discuss this more when we are discussing process costing. The normality or the normal cost is a cost that you expect under your normal condition of operation. That one is a normal cost. But if it is an abnormal cost, it means that it's a cost that you don't expect. It comes, but that cost was not expected to occur. Then you say that one is an abnormal cost. So we can also classify cost as capital revenue or capital expenditure. So if it is a capital or a revenue, it can be capital expenditure, are those costs mainly on acquisition of asset or major expenditure on asset. We classify them as capital expenditure. If it is revenue expenditure, are those costs which are incurred in the normal operation of the business. For example, salaries, electricity, then we call those ones revenue expenditure. Then we have what can classify cost according to the time, where you have historical cost and the predetermined cost. Historical cost are those costs that were incurred in the past. Sometimes we call them sunk cost in business. Predetermined, those are future costs. This sometimes in finance you may find they are called relevant costs. Then you can classify a cost according to the planning and the control, where you have budget cost, budgeted and standard cost. This is almost the same because these are predetermined costs. Then you have managerial, you have the marginal cost, out of pocket cost, sunk costs, which is also a past cost, opportunity cost, and replacement cost. These are according to the managerial decisions. Marginal cost, those are incremental cost, additional cost, what we call them in finance. They are additional cost. Sunk costs, those are past cost, which we have already talked about here, which is the historical cost. Opportunity cost, these are costs for the best alternative foregone. Replacement cost, the cost that you incurred in replacing an asset. So this is a summary of what we have already talked about. That is a classification of a cost when it comes to traceability. We have a direct cost, where you have the direct material, direct labor, and the direct expenses. Please, as I said in our previous slide, that direct cost are those costs which you can trace in full on a product. For example, the material cost, direct material, direct labor, direct expenses. These are direct cost. Direct material are those material that you use in production. When it comes to direct labor, you mean labor that which is also used in production. Direct expenses are those expenses that you are incurring still also in production. When it comes to indirect cost, as I said before, indirect cost are those costs that you cannot trace in full on a product you have produced. They are incurred in the production process, but you cannot trace them on the product you have produced. A good example are indirect material like a glue, art. They are incurred in the production, but you cannot trace them. We have indirect labor like salary of the supervisors. They are also indirect cost. But we also have indirect expenses like a factory rent, factory electricity, and other overheads which are incurred within the product. Another way of classifying cost, as we said before, is according to the function. According to the function, you can classify a cost as manufacturing. It can be administrative cost, or it can be a selling and a distribution cost. Manufacturing, those are factory overheads or those are costs that are incurred within within the factory. Administration, those are general administrative costs. Selling and distribution, that is related to selling a product. So another functional of classifying the cost, we have the prime cost. So when we talk of the prime cost, we specifically mean the direct cost. So if we get direct material plus direct labor plus direct expenses, then we get what we call the prime cost. Now when it comes to factory cost, we mean the indirect cost, like factory rent, factory electricity, salary of supervisors, factory depreciation, any expenses incurred in the factory or manufacturing cost, which is not a direct cost, then we classify it as a factory cost. Then we also have what we call cost of production. That is, we are adding the prime cost plus the factory cost. Then we can have the cost of production. Then if you have the total cost of sales, meaning we are having the cost of production plus the functional cost, which we are not included, like distribution, administration, then you are going to get the cost of sales. So as I said before, prime cost, you are getting your direct material plus direct labor plus direct expenses. When it comes to factory cost, or what we call worker cost, you have the prime cost, meaning these are your direct cost, plus work expenditure or factory expenditure, or what called the factory overhead. Then you get what called the factory cost. So if you look at the office cost or gross cost of production, the gross cost of production, we are having our factory cost, that is the cost of goods manufactured, plus administrative cost, plus our office overhead or the selling and the distribution are also added here. The total cost of sales, you'll have your office cost, selling and the distribution. If it was not considered in the previous, then you can also add here and get your total cost of sales. So, classification of cost according to behavior. As we said, when you are classifying a cost according to behavior, you have the variable cost, which I said variable cost is a cost which changes with the changes in the level of activities. So meaning that when you increase the level of activity, the cost will increase. If you reduce the level of activity, the cost reduces. Then we also have what we call a fixed cost. A fixed cost is a cost that remains unchanged or remains constant at any level of activity. Even if you increase or reduce the level of activity, the cost remains constant. Another one is what we call a semi-variable cost. Semi-variable cost, as I said before, it combines these two costs. It combines a variable cost and a fixed cost. Part of it is variable and another part of it is fixed. As I said, if you look at maybe the salary of a salesman, you may find that he receives the salary but also receives a commission. So the salary will be fixed, but a commission will be variable. Another one which is not included here, or which you can add here, is what we call a step-up cost. Step-up cost. So a step-up cost, it's similar to a fixed cost. Step-up fixed cost. It is similar to a fixed cost, but in that it is constant up to a given level of activity. If that level of activity is exceeded, a cost increases and then it becomes constant again. So that is a step-up cost. So let's look at some of the cost accounting terms, and the first term we can look at is what we call a cost center. When you're talking of a cost center is a location where the cost can be ascertained or where the cost can be determined. We call it a cost center. For example, if you talk of a university, teaching is a cost center. So in teaching, there are different costs that are incurred within teaching. Or if you talk of marketing, can be also a cost center for university, because there are different costs that can be incurred within the marketing department. Or if you talk of ICT, although ICT can be a service center to both to the production, as we shall discuss when we are discussing overheads, but can also be a cost center. So in brief, when you talk of a cost center, is a location where a cost can be ascertained. Another one is what we call a cost unit. When we talk of a cost unit, is a unit on which a cost can be ascertained or can be assigned. For example, if we say 5 kilogram of, to produce 1 unit, you need 5 kilogram of material. So meaning that the 5 kilogram of material or the kilogram of material is a cost unit. Or if we say water, the cost unit for water it will be liter. So that is what we call a cost. Then we also have what we call a cost statement. When you talk of a cost statement, sometimes we call it a cost sheet, is a statement which is prepared to present a detailed cost of the total production. So if someone wants a report on production, then we provide what we call a cost statement. It provides information of the cost incurred during the production process. So this is a simple illustration on how to determine our cost, or a cost statement, a cost sheet. You'll have your direct material, and under the direct material, if you are determining the cost of material, we begin with the opening stock of the raw material. We can write it here. Then we have the material we have purchased during the period. On the material, we will less an abnormal loss of the material, if there is any abnormal loss of the material that were incurred. We also less the returns to the supplier, if some of the material were returned to the supplier. And we also less the closing stock of the raw material. So if we get this information, then we are going to get the cost of the raw material that we have consumed here. So after we get the cost of the raw material consumed, then we add the direct wages and the direct expenses to get the prime cost. So on the prime cost, we get the factory overhead expenses. And as I said, factory overhead expenses, we only look at those expenses that were incurred within production, like indirect material, factory rent, factory electricity, factory depreciation. Those go within factory overhead cost. Then on the factory overhead cost, we get also add the opening stock of the work in progress. So when we say work in progress, are those material that are still in the process. Then we also list the closing work in progress. So if you add this information, you are going to get the cost or factory cost, or what we call the cost of good manufactured. So if you have also some scrap, because you may find that during production some materials became maybe were scrapped. So if you have some scrap, you also list the scrap, because if this scrap are going to be sold, it means they are going to reduce your cost. So if you have scrap, you list the scrap, then you get the factory cost. If you don't have scrap, then here it will be zero, then you have your factory cost, or what we call the worker cost. Then on your worker cost, you add the office administration, the salary of the managers, then you get administrative cost. Then you can also add the opening stock of finished goods, you less the closing stock of finished goods, then you can get the cost of goods sold. Then the cost of goods sold, we consider the selling and the distribution, then we get the total cost of sales. And then from here you can be able to determine your sales. So this is a general brief of what of course we are going to discuss. I think we have looked at this one. I've just looked at the introduction, but this one provides a general overview of the whole course. That is cost accounting, cost ascertainment. If you come to cost accounting, cost ascertainment, and when you are ascertaining cost, you need the material costing, you need the labor costing, you need the overhead costing. Then, so we shall discuss this in our other slides: the cost, the material costing, the labor costing, and the overhead costing. Then we shall also look at the costing methods. So if you look at this, then how do we determine the cost? We shall look at job costing, and then also look at operation costing. Then we shall look also at the costing techniques. We shall look at absorption versus marginal costing and activity-based costing. We shall look at budgetary controls, standard costing. So generally, our discussion of this chapter is based on this. So the last part are the activities which are also attached on your slide. So thank you very much. So we shall meet in another class. God bless you.